FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, we're going to take a look at, you guys keep requesting videos on it. So we're going to take a look at directional bias again. Now this time what we're going to do a little bit differently though is we're actually going to go into doing it from a day-to-day basis instead of like playing out a whole week. So the premise is to make the videos more shorter so I can do more of them. So just to try to keep the video shorter, we're going to break down literally a random day on a random pair, and we'll take a look at how directional bias would work like that. All right, so let's go ahead and jump right into the video, guys, and without further ado, let's get it. All right, so let's go ahead and, like I said, let's break down a day, a couple days here, just to on different pairs at random times. So let's go ahead and let's do gold. We haven't done gold in a while. Actually, I don't think we've ever done it before. So let's do gold, and we'll shrink it here. And where's the date here? Let's pick out a date. Again, we're gonna try to get, you know, dates essentially that are before the pandemic. That way we can get like a normal type of you know, kind of range and stuff. So we're gonna be doing somewhere in 2019 or something. So I don't know, let's do August, and we'll pick like different days for different pairs. So let's do a Tuesday. Let's do this Tuesday here on August 6th. And all right, so let's start from here, which is Sunday, Monday, and then let's open this sucker up. And let's see what we can do here. All right, so there's price action there. Do we have? We do. There we go. There are the EMAs. All right, so we're looking at trying to determine directional bias on August 6th. So let's go ahead and let me fast forward to the end of the Asian range, which is typically something that I would like to have just to kind of help out with directional bias. All right, so let's take a look. The only thing that we have, obviously, for the beginning of the week is just Sunday, Monday, which is basically one straight move in one direction. There was really no setup at all that we could have taken there on that particular day. So if we zoom out, though, we could potentially see that we have here a quick dip, which could be a peak formation low. We could have definitely a level here as well. So something here, and let's do another one here. All right, and then obviously we'd have something forming here. All right, so because of where we are, essentially where price is right now, you can see that we're basically looking, we're trading above peak previous week's high. All right, so obviously before trading above that, essentially we're in a uptrend, right? Because we're trading above the previous week's high already. You can see the previous week's high was all the way up here. So if we're trading above the previous week's high, then that would tell me essentially that we're in an uptrend on the higher time frames. And I could just essentially look at that, or tell that just by looking at the higher time frame EMAs here. So the 200 EMA is basically the 50 on the 1 hour. So it tells me that the 50 is, you know, essentially still in an uptrend, and I know the 4 hour time frame is probably the same as well. So I'd probably be looking for buys on this particular one, just to keep going with the trend here. So I'd be looking for buys, you know, maybe a bounce off of this 200, you know, maybe a type 1 here, or maybe a type 1 off of bounce off the previous week's high line, something like that. So I'm very interested in buying. So if there's an opportunity here to buy, then that's what I'll do. I wouldn't be interested in selling this particular pair at the moment. So I'd be more interested in buying than selling because of that. So let's go ahead and let's take a look and see how this plays out essentially here. Let's see. All right, so essentially you could see price is moving straight across. I mean, it's not really, kind of doing anything. It almost seems like, the 50 here is kind of keeping it at bay, where it doesn't want to, go up any higher. I'm kind of thinking that maybe this could be, this right here could be a first leg. The problem is that we don't have anything like coming back down again to give us like a second leg, So far, like the closest thing to a second leg would be like this spike down right there, but it really didn't make it to the very bottom, So that's one thing. So I really would want essentially to have some kind of a candle that's, that's kind of moving, that moves higher and whatnot. But let's see what we have. Nothing. There we go. So notice how this candle here pretty much is above all these other little highs here from the last, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. So you figure it's about last 2 hours or so. So around 6 o'clock, 5:45 o'clock in the morning, you have this one candle here that just breaks above everything and closes above all these little tiny highs here. All it is, guys, is just literally behaviors that you're looking for essentially. Okay, it's what it's all about. It's all about behaviors. So if I'm thinking about taking a trade setup here to be a buy, I mean, what does it look like? I know that on gold, the pip value is extremely high. So there's really not a way to use like the standard, 15 pip stop loss. You have to use something bigger than that. Typically is about maybe 50 to 60 pip stop loss. Now, basically means that you're going to have to use a smaller lot size than what you would normally use anyways because of the pip value so high. So for example, if you use, let's say, a standard lot size, maybe take a half of a lot instead, and still go for a 2-to-1 risk to reward ratio. So basically a 2-to-1, I'm just trying to get to essentially the top of the range, top of the Asian range. So I'm not trying to do nothing crazy or anything like that. I'm literally just trying to get to the top of the range to get a 2-to-1, and really 2-to-1 is more like maybe right around here. Okay, so 2-to-1 risk to reward ratio is what I'm trying to get from this particular trade setup. All right, so really I'm thinking that this is a type 2. Really the second leg didn't come all the way back down again to the bottom of the range. It just kept hanging around here, and now we have one candle basically that broke above the last 9 hours of trading. So let's see how this works out here if it doesn't work out. Let's see. So we're going to count 6 candles, by the way. So we're going to wait 6 candles out, and essentially we're going to see if we're in substantial profit or if we're not in substantial profit. So 1, 2, 3, 4, 5, 6. 6 candles at the time, which was this big candle here. And at that time we were up 40 pips or so. So yeah, we were in substantial profit, which is good. So we would have stayed in the trade. If we were not in substantial profit, then we would basically get out of the trade and break even. Now, this actual big railroad track coming back down is kind of concerning because of the fact that it was so big. Like it took out, you're looking at 1, 2, 3. I mean, it took out a bunch of candles, maybe the last hour and a half of trading. So that's kind of concerning there. So if this trend continues to where it continues basically below, trading lower, then I might just get out of the trade and call it a break even or a small loss. Take the small loss and get out of there because it's not worth, it's just not worth keeping a trade that's going to be a losing trade and lose whatever 50 pips or whatever that you're risking here. It just doesn't make any sense. But yeah, so if this trend continues here, then I would get out of that trade and just get out and just take a small loss. But let's see. So obviously we're rolling into the U.S. session. This is about 9:30, 10 o'clock or so, and you can see it's not really moving. Well, now it is, but before it wasn't moving there. It's moving sideways a good hour and a half, and it looks like you just hit take profit there on that one. Okay, so that trade ended up working out there. Keep in mind that that railroad track there, if it would have continued to go down, I would have just gotten out of that particular setup because it's just not worth keeping, because it could have easily turned into a type 3. So it could have easily went something like this and then boom and then dropped. So cool. So that was that particular setup on was this Tuesday, the 6th of August. So that was that particular trade setup on gold. All right. So let's take a look at another one, and let's reset this and take a look at it on a different pair completely. What's one we haven't done yet? We haven't done EuroCAD. Let's do EuroCAD. And same thing. We will do this. And same thing, we're going to go back. We're going to go back before, 2019 or so. Yay, it's working. All right, let's get to this. Let's open this up. Real big. All right, cool. All right, so it's another Tuesday. Let's go ahead and play it. Let's go ahead and play out the Asian range here. Yeah, let's see what happens all the way to the end here. There. All right, so let's take a look at this. So this is Tuesday. You can see Sunday, Monday, complete nonsense, but sideways movement. So really nothing there. Keep in mind you have EMAs are going straight through price. Okay, so not really feeling that at all. The fact that they're going through straight through price. So not a big fan of that. What else can we get out of this here? You've obviously been trending down the previous week. You had a market maker cycle the week before. And then that's it. So, all right, so let's take a look and see. I don't really have a bias right now, actually, because, I mean, it could bounce off of these, these EMAs here and like do like a type 2 to go up. But I'm not really sure. So let's play this out and see what happens here. Let's see if we can get any price action to, essentially give us any clues, All right. Okay. So what do we have here so far? We basically have just some very large candles here moving outside of that Asian range box. And this one, so I want you to pay attention to this one specifically, this big one here, because this big one could have easily said, "Hey, I'm not going to go past, you know, these two sets of candles here," but it obviously did. Okay, so now the question becomes that I'm really interested in seeing is we're basically kind of moved away and below the 50 and the 200 EMA, which are basically right here. Now, the thing that I would like to be interested in seeing is, does price push back? And if it does, do the EMAs prevent price from going back up again? Okay, so if basically the EMAs that are right here and right here, are they going to essentially block price from going back up again? If it is, this could be a scenario where price, basically the EMAs push price down and it goes low. And essentially it could be like a form of a type 3 setup, which, you know, you're coming out of the Asian range, you go down, you come up to the middle, and then you basically do something like this. I don't know why the hell that line is drawing that, but you basically do something like this, okay? And the EMAs essentially prevent you from doing it. So let's see. Yeah, that's what it looks like. Boom, there it is. There's your move right there. There's your move right there. So the question is that candle too big? It's a pretty big candle. Actually, only it's a 13 pip candle, right? So you got to start thinking, okay, well, if this is going to go down, like how far down is this going to go, and is this worth, you know, kind of putting it out there, right? So look at the structure that we have so far. Where can we, if this is going to go down, where could we take it down to? Okay, if we just look to the immediate left, we have essentially this area right here, which are these low here, and then the next obvious spot would be down here, right? Somewhere down here. So we'll just put two lines here, one there, one here, and then obviously we have this previous week's low, which is all the way down here as well. So to take this again, this is it looks like a big candle, but it's only 15 pips out. Okay, so to make this worthwhile, a 2-to-1 risk reward ratio, essentially you're looking at somewhere like that. So that would be the trade setup. Okay, so let's take a look and see what happens if it even goes that far down. Remember, the risk reward ratio is not bad. It's a 15. It looks like a big candle, but it's only a risk reward ratio of still 2-to-1, and it's 15 pip. All right. The only thing that would basically, you know, give us any kind of a break would be essentially if we get any kind of a pullback on the next candle. So if we get a pullback on the next candle, then that would, you know, save us something, but we'd have to see. So didn't really get a pullback too much on that candle. So, you know, I don't think that would have really mattered at all. So let's see what happens here. Not really big of a pullback. That's a bigger pullback, but didn't matter. Okay. Let's see. Do we go? Okay, so it did go 2-to-1, which is awesome. So it's 30 pips, and it's still going down. Now it's all the way down to previous week's low. Jeez. Okay. Still going down. Think we may have found the bottom here. No. Okay. So it went all the way 70, around 70 pips or so. So well over our 2-to-1 on that one. Nice trade set up there on that. And you can see just because the candle looks big, you still have to measure it out. The thing that's on our side here is that it's 0 CAD, so the pip value is a lot smaller on this. So obviously, as big of a candle as that looks, it was still only 15 pips. You didn't get a pullback, so that really didn't help you. But you still got the trade set up essentially, and everything like that. So what is this? 10:45 is what it is right now. So that would be it there. Yeah, so that'd be it for that particular day in that trade. Okay, so there you go. So that was picking out that directional bias there. And you can see that I really didn't have a directional bias until we got to see what price action was, what behavior price action was giving us. Okay. And again, the only difference, guys, is that when you do the back testing, you see this stuff happen all the time. Okay, you see stuff like this happen all the time. So when you see it and you're looking at it and you're thinking and you start to think about it, you're like, holy crap, I've seen this before. So you expect a certain behavior to happen. If that behavior happens, boom, there's your trade setup. If the behavior doesn't happen that you expect it to do, then you just don't take the trade. It's perfectly fine not to take the trade. You don't have to trade every day. It's not about the quantity of trades that you take. It's about the quality of trades that you take. All right. So, guys, I hope that this video on directional bias from a daily standpoint of looking at it at just random days was helpful. And if you like this version of daily bias, let me know in the comments. Give the video a like, guys, and make sure to subscribe. If you're new to the channel, make sure you check out Trading with Market Makers playlist. It's got the entire strategy on there for you for free. All right, guys, thank you so much, and have a great week.